Welcome to The Explainer. Today, we're diving into two huge economic stories developing right now: a hidden risk that's shaking the U.S. banking system, and a really radical shift in U.S. China trade policy. Let's get right into it.
If you see one cockroach, you should probably assume there are more. Okay, that is a pretty chilling warning, especially when it comes from one of the most powerful people in finance. It came right after a regional U.S. bank reported a shocking, completely unexpected loss. So what exactly is this cockroach, and is it a sign that our whole financial system is on shaky ground?
So here's how it all started. On October 16, 2025, a bank called Owens Bancorp announced a massive $50 million loan loss. And if that wasn't bad enough, another bank immediately sued the very same borrower for fraud. The source of all this trouble? A type of lending that's been quietly booming in the shadows and might be way riskier than anyone thought.
This loan was made to something called a Non-Depository Financial Institution, or an NDFI for short. Now, you've probably never heard of NDFIs, but they are a huge, and I mean huge part of our financial world. Basically, think of them as financial institutions that don't take your deposits like a normal bank, but they do provide enormous amounts of credit. This is the heart of what people call shadow banking.
So who are we talking about here? Well, this isn't your local bank branch on the corner. We're talking about massive players like hedge funds, private asset managers, and these giant private credit funds. They operate in the shadows of the traditional regulated banking system. And because the rules are different for them, they can take on a whole lot more risk.
And get this sector has been growing at an absolutely explosive rate. We're talking 26% every single year. To give you some perspective, that's more than double the growth rate of the entire economy. So why the massive boom? Well, after the 2008 crisis, regulations got a lot tighter on traditional banks. NDFIs basically jumped in to fill the gap, often taking on the riskier loans that the big banks wouldn't touch anymore.
But what truly sent a chill down Wall Street's spine wasn't just the size of the loss. It was the fact that the bank's collateral, the assets that were supposed to back up the loan in case things went bad, had suddenly vanished. It was worth practically nothing. This revealed a terrifying lack of transparency and raised a really scary question. If this could happen to one bank, how many others are sitting on similar time bombs? This whole situation has left the market at a major crossroads, with two totally different ways of looking at what happens next. Is this just one bad loan, or is it the tip of a much, much bigger iceberg? So on one hand, you've got the optimists. They're saying, hey, calm down, this is a one-off problem, just a few bad actors. But on the other hand, you have the pessimists, and they are seriously worried. They fear this is a symptom of a much larger, systemic problem that could ripple through the whole economy, kind of like the subprime mortgages did back in 2008. And what's really pouring gasoline on the pessimist fire is a major structural weakness in the U.S. economy right now, a vulnerability that could turn a small shock into a full-blown crisis. Just take a look at this. This chart shows just how much the U.S. stock market is leaning on the AI boom. Without the insane surge in AI stocks, the market would have been almost completely flat in the first half of 2025. That means 80% of the market's gains are coming from just one place. That kind of dependence on a single, super hot sector makes the whole economy really, really vulnerable. Okay, so we've got this potential financial time bomb ticking at home. But at the exact same time, the U.S. government is opening up a new, very aggressive front in its economic battle with China. And this is where things get really interesting, because these two stories, they're more connected than you might think. The administration has announced a radical new policy of setting price floors. What does that even mean? Well, essentially, the government is going to set a minimum price for certain goods. The goal is to protect American industries from being undercut by what they see as unfairly cheap Chinese imports.
So, just how radical is this? Let me put it this way. For a country that has spent decades championing free markets and free trade all over the world, this is a massive, massive change in direction. In fact, some people are calling it straight-up economic warfare. To be blunt, this is a huge deal. This kind of direct government intervention, telling industries what they can and can't charge, it's the kind of thing you'd expect to see in a planned economy, not in the United States. It's a clear signal that the trade war with China is entering a brand new and much more aggressive phase. And you have to see that this didn't just come out of the blue. This timeline shows how quickly things have been escalating. We've had threats of tariffs, canceled meetings. It's been heating up for months. And now, with this price floor policy, it looks like the conflict is about to get a whole lot more intense.
So, let's recap. You've got a potential banking crisis at home and a full-blown trade war with China heating up abroad. How do you think the market is reacting to all this uncertainty? Well, as you can probably guess, investors are running for cover. And where are they running? To the ultimate safe place to park your money, gold. The price of gold has absolutely skyrocketed, surging over 54% in less than a year to hit an all-time high. This is basically the market's fear gauge, and right now it is flashing bright, bright red. This gold rush is being fueled by a perfect storm of uncertainty. You've got the banking fears, the trade war, political chaos in Washington, the whole shebang. And here's an interesting twist. One of the biggest buyers of gold right now is actually China's central bank, as it tries to become less dependent on the U.S. dollar. And to top it all off, just to make things even more chaotic, a government shutdown means that key economic data, stuff that everyone relies on to make decisions, isn't even being released. So investors and policymakers are pretty much flying blind, trying to navigate these twin crises with almost no visibility. So where does that leave us? We have this hidden threat to the financial system bubbling up from within, while at the same time we have this very open economic conflict with our biggest rival playing out on the world stage. It really makes you wonder, are we entering a new era of permanent economic uncertainty? And what on earth would it take to get back to some kind of stability? Thank you for joining us for this explainer. We know this is a lot to take in, but we hope this breakdown helps you understand the complex forces that are really shaping our economy right now, and hopefully it gives you something to think about as you navigate these pretty uncertain times.